Watching NSE closing bell on CNBC-TV18, turning out to be a really good day. The good part is that the rally that we've seen so far is holding. In fact, we've been building onto our gains and now the Nifty is at the highest point. Couple of stocks deserve mention though. A lot of stocks bouncing back from their lows. So Z Entertainment, case in point. Remember, the lowest level it hit at the time of that whole promoter pledge issue was 318 rupees. And now in less than 2 months, Z Entertainment has given you returns of 50%. That's the kind of mammoth moves that many of these stocks have seen. Sandeep Wagle joins in now to give us some cues for the last hour of trade. Sandeep, hi, afternoon. Plenty to buy, I'm sure. Spoiled for choice, but what are the stocks you're looking at?
Afternoon, Sonia. I would go with a buy in a Torrent Pharma, stop loss of 1833, target 1890, and a buy in a Tata Steel, stop loss 522, target 548.
Okay, Sandeep, thanks a lot for those trading ideas. Escorts has been phenomenal. I think the management was on a channel, I think 10 days back, the stock was 690 then. Now crossing 800 on the stock. Phenomenal move. Mr. Tulsian, getting too fast now on the stock, or you reckon this is still a good price for Escorts?
Anuj, I think it's still looking at a good, quite good at, to buy at 805. Just now it has touched 805. And if you really see in fact, that's what I've been saying, that January and February months are always seen the poorest for the tractor sales. But if you really see the sales support performance, in fact, I've recommended after seeing the January sales number, and the buying was reiterated again after seeing the February sales numbers. March again, shows probably the best amongst these 3 months. March will definitely be showing the better performance, and then thereafter May and June again. So I think the better days for tractor makers are seen coming in which the Escorts will really be seen the big beneficiary. And apart from that, if you take a call on the construction and engineering, earth moving equipments, even there they are doing quite well. In fact, in the railway segments also they've done quite well. So overall, I think the things are looking quite good, because March sales numbers will really be cheering the market further going forward. So I won't be surprised to see the share price moving to maybe 880 or 890 maybe by this month, and when we will be seeing the March monthly sales numbers on 1st or 2nd April.
Actually, it's interesting you point out Escorts, Anuj. If you look at the list of stocks, all the erstwhile favorites, investor favorites are coming back now on the radar. Whether it's, of course, an Escorts that you pointed out, there's a PVR, which is up almost about 6%, Edelweiss Financial, Havels has hit a new high. So once again, I think investors are looking to buy quality names at this point.
The basic premise for the, perhaps Edelweiss slightly different, because that's been a more recent story. But, the other names that you pointed out, Havels, Escorts, PVR, Mothers and Sumi, I think they've all been multi-baggers. And,
wealth creators, many of them,
and they went through some kind of that's the whole issue. Whether the slowdown that you saw was cyclical or structural, like you saw with Eicher Motors. I mean, the jury's out, but like you're seeing perhaps in a Maruti, for example, the stocks which have created you so much wealth over the last 1 decade, the story is just not going out in one day. Z Entertainment, I think, is a classical case in point, and from 300 to 470. So this will happen in stock market again. Sonia. On a day like today, now it sounds, easy.
And in hindsight,
in hindsight, did you have the conviction to, buy these stocks 3 months back? Yeah. I think you need to ask yourself this question more than anything. Next time when the market goes to that phase, will you buy these stocks? And that's why, that's where the SIP approach works, and adding in lump sum on panic days, that's perhaps the approach from an investment point of view. Yeah.
Right. Anand, what about you? Specifically, when it comes to, say, auto names or cement names, would you buy any of these market leaders now?
Well, they've had a rally, so I would imagine that there should be some give from this level. But that said, I think, you are likely to see cement doing better over the next 12 to 24 months. And autos, of course, have been kind of cyclically hit, but cannot remain down if the rest of the market were to move up. If you are looking at tractors, I think even Mahindra's looks to me quite attractive, given the fact that though it may be growing a little slower, if you take out the holdings that they have in the rest of the in the rest of their investments, actually it's trading at single-digit PE 1 year out. So, many of the frontline companies are not particularly expensive at this stage, even adjusting for lower growth.
All right. Anand and Mr. Tulsian, we leave it there today. Thanks a lot for joining us. Let's move on now. Ayan Mukhopadhyay now joins us, Director of Institutional Equities for UK and Europe at IIFL. Ayan, hi, good afternoon. Thanks a lot for joining us. You are the right person to talk to. What's happening? Why all of a sudden these dollars chasing Indian market? So much money.
Good afternoon. Good afternoon. I think, yes, I think for the last 1 week, things have changed a lot, as we can see. And yes, I think now the markets are not only factoring an NDA coming back to power, but I think now the markets are factoring an NDA majority, which has its own risks, as we all know. But it seems that what the markets are now factoring is that once there is a stable government at the center post the elections, which was always a concern, whichever party comes, I think the concern was whether we're going to have a stable government and a continuation of the reform agenda. I think what investors are now probably factoring in is the return of the animal spirits that will come into the markets. But I think the FII numbers that we have seen this year, I just wanted to give a caveat here. I think the FII numbers that we have seen in a big way, I think that I don't really think that that's active investment in a big way. There could be a bit of ETF money there, and also this figure that we have seen, about close to $2.5 billion or so inflows that we have seen this year in FIIs. I think that's also skewed a bit by a lot of the money that has come in the deals that has happened, or the placements that has happened rather. So in that way, I think yes, the sentiment has changed, especially over the last 2 weeks or so, and we are seeing a bit of a rally. Definitely, we are seeing more of an exponential rally in some of the mid-cap names, and it does seem so that the market is now factoring in a sort of a stable government post-elections.
Okay, Ayan, hi, good afternoon. So, let me just drill it down to individual sectors and stocks, because that's the question that all retail investors have on their mind, right? What do you buy now after the market has moved quite a bit? I noticed that in the large cap space, you do like names like Axis Bank, Tech Mahindra, L&T, etc. But particularly for banks, there's a common theme here in names like Axis, Yes Bank, etc. There have been some management changes as well. Is this a good time to be accumulating in these private sector corporate-facing banks?
Yes, definitely. I would say Axis Bank is our top buy, and we believe that the management change and the direction of the bank right now is very, very positive. We believe the company can trade at a multiple higher than this. The bank can have its ROAs and ROEs expand in the next 2 to 3 years. The NPAs are going down. And yes, we are positive on this bank. We're positive on the direction that the new CMD is taking the bank towards.
Okay.
And yes, we are overall still very, very positive on the private banking space. We have been continuously positive over the last few years. And of course, the names that have been over-owned and which are expensive, like the bank, HDFC Bank and Kotak, we still like them, but from a valuation point of view, banks like Axis or even ICICI Bank are cheaper. And given that they are more corporate-facing, I would think that they still have value left. Even given the run that they've had, there is still value left in these names.
Okay, there's still value left in names like Axis Bank, perhaps. What about some of these auto names, Ayan? We've seen a sharp comeback for names like Escorts, but Eicher also bouncing back from the lows. But there's others like Hero. They all bounced back from the lows. But do you reckon this is a good time to perhaps get into some of these stocks?
Cyclical story, and a rally over a hope of an election, I don't think so. It gives a pure cyclical hope on that front. We are negative on the auto space. To be honest, we are very negative on the auto space purely on numbers. If I take on two-wheelers, also we have been seeing the numbers coming in has been pretty weak, and the volume growth decline has been pretty accentuated in the sector. Even the discounts given by the various operators have not been helping. So we are still pretty negative on the sector. But of course, if there is a complete cyclical turn, and if all the cyclical stocks rally, autos are one of the sectors that on the very forefront will rally. So that is what we are seeing. And coming even to four-wheelers, we have seen in Maruti's February numbers, and I think it was the 8th consecutive quarter auto numbers, of volume numbers being flat or the volume growth numbers being flat. So we have not yet seen the numbers changing as such to see the demand uptick returning in a major way to be positive on it from a fundamental point of view. So I think we will need some time to make a concrete fundamental decision on these names.
Okay, I have some more stock questions, but before that, Ayan, before the break, when I was chatting with you, you mentioned that a lot of populist policies in an election year pose a risk on the fiscal front. Now, we have seen those populist policies, right, whether it's a farm loan waiver or the farmer income transfer scheme. Do you think any of that will have any implications on the market at all, or will the market continue to climb these walls of worry?
Sorry, I didn't hear the question fully. I think there was a disconnect in the middle. Can you please repeat the question, please?
Sure. I was asking you with regards to, the point you made before the break about how populist policies in an election year are a risk on the fiscal front. We've already seen many of those populist policies announced, right? Whether it's the farm income scheme or the farm loan waivers, etc. But it hasn't really had any effect on the markets yet.
Yes, means we have to be, the thing is we have to see what would be the implications of that on two fronts. One is on the inflation side and what is on the fiscal side. So on that, I think we would need a bit more data coming in, and we have to see the RBI's policies on that front. So we'll have to wait and watch on what would be the implications of that before we see what would be the impact. Now, currently, I think the market is too buoyant and completely focusing on the election outcome, at least after what we have seen in the last 2 weeks. I think the market's single agenda has been on the elections, and the focus has been completely on that, and everything else seems to have taken a bit of a back burner there. So all those concerns, I think, will come back once this thing dies out and once we have a new government. And I think, again, once these things are out of way, I think the focus will come back on the macro factors, will come back on growth, and most importantly, will come back on the earnings, which we have not for the last 4 to 5 years. We have seen double-digit earnings downgrades. So that's, I think, from a foreign investor's point of view, that is still the single biggest sticking point on India. Or the concern on India is that we have not seen the earnings upgrades coming, and the market is still very, very expensive compared to other emerging markets. So, that is something that we will have to see probably once the euphoria of the elections or the run-up to the elections die down.
Okay, by the way, just look at HDFC's intraday chart. What's happening in this market is a lot of these large caps, especially financials, which have corrected, are seeing buying. This is where the FI money normally goes in first, and look at that move in last 15-20 minutes on HDFC. That's having a phenomenal move. Ayan, your thoughts on the NBFC space? We've seen quite a bit of rally, of course, of late. The names like Canfin Homes, of course, among the large ones, HDFC stands out. But even the beaten down ones like India Bulls bouncing back from the lows. Muthoot Finance has been making new all-time highs practically on a daily basis.
I think from the NBFC space, I think people will be looking at, especially after what has happened in the last 6 months, I think people will be looking at it more from a corporate governance point of view. And from the FIS point of view, I think the investors will be looking at buying very, very high quality NBFCs where there is the governance doesn't have a real question mark, and also where there is immense growth. I don't think the valuation will be much of a concern there if there is high growth and the governance is in a good state.
Okay, Ayan, we'll leave it at that. Thank you so much for joining us and giving us your thoughts and enlightening us about your view on the large cap names. So there's definitely participation coming back from the foreign investor community into the Indian markets. It's a pre-election euphoria that a lot of people are talking about.